Good day, welcome to our YouTube channel. It's another weekend for our weekly analysis where we talk about what happens in the market the previous week, what I expect of the market the previous week, and what actually comes to fruition. Today's date is in 16th of the month of February 2025, and the analysis for today will be what I'll be using from 17th to 21st of February 2025. So without wasting much of our time, we start from our bellwether, which is the dollar index. What are the levels I called the previous weeks, and what actually happens in the market. So as of last week, I was interested in the market price visiting this level 107 big figure on dollar index. And the US dollar index, I was expecting 107 big figure, and as you can see, 107 big figure has been tagged. Why and what will I be expecting after that? So I was expecting this buy side imbalance, sell side inefficiency. Can it hold its position as a buy side imbalance, sell side inefficiency as a fair value gap, or it will give way? So as long as the market is trading above the consequence encroachment of this bullish fair value gap, former bullish fair value gap, as long as the market price trades above it, so I was interested in 109 big figure, and we could see 109 big figure has been taken last week and the week before. So now that the market price has found its way below the consequence encroachment of this buy side imbalance and side inefficiency, so I'll be expecting the lower half of the BC is now, I'll be viewing it as an inversion fair value gap now. Its primary function, its former function was to hold the price from going down. Now, the moment the price has went down, the next thing I'll be expecting is, if I thought the market wants to retrace, the market should not go beyond or above the consequence encroachment. So I'll be watching a scenario like this. Okay, let me extend this to the right. So this is what the scenario I will be watching. I will be watching, since the market price has dropped, then I'll be expecting, if I thought the market wants to go up, it should spare the consequence encroachment, then continue lower, because this CB was once a sell side inefficient. It only has a buy side movement, and now the sell side movement has been completed. So the market price has seen both the buy side and the sell side of this CB. So this level here and this level here and this movement, this was the buy side inefficient movement, this was the buy side inefficient movement, and this was the sell side efficient movement. So that level has been balanced. So the coming week I'll be expecting 107.5 107.500 to serve as a resistance. I should be able to see the midpoint of the consequence encroachment of this CB to serve as a resistance to the price that will send us into at least the lowest hanging fruit should be 106.5, and we should see movement into 106 big figure. But 106.500 will be what I'll be watching personally, and if it should go lower, I'll be interested in 106 big figure. So I will be expecting 107.5 to serve as a resistance level. That is that. So let's dive into our cable, which is the GBP USD. On GBP USD last week, I was interested in 1.26 thousand and 1.26 100. 1.26 100 and 1.26 thousand. So 1.26 thousand and 1.26 hundred, 1.26 thousand, sorry, and 1.26 100. Both level has been traded into. The eye of this candle comes in at that's formed on Friday. The eye comes in at 1.26305. So the level I had in mind has been taken, while I expect 1.23 thousand to serve as a support, and it still remain a support to the price. So what will I be watching the coming week? I'll be watching this level the coming week. The little gap around here. That'll be what I'll be watching the coming week. We have a little sell side imbalance, buy side inefficiency there in form of fair value gap. See what I say. And bring it out. The little separation between the low of this candle. The low of this candle was 1.26660, and the high of this candle was 1.26668. Just a tiny movement. So that'll be what I'll be watching the coming week on cable, because the two consecutive candles here are the bearish order block here. They are the bearish order block. So I'll be watching, are they ready to hold the price and serve as an order block, or they will turn into a mitigation block? So in a nutshell, I'll be watching 1.27 thousand the coming week. 1.27 thousand. So if we should see a movement above 1.27 thousand, which is 1.27500, that will also be good, because that will be the high here. That will be the high here. So I will be watching on cable as long as 1.25 thousand. 1.25 thousand will be my support level. 1.25 thousand will be my support level, and I'll be watching 1.27 thousand and into 1.27500. So why I picked 1.25 thousand as my support level. What is wrong with my network? Because I'm envisaging a kind of, what is it called, buy side imbalance, sell side inefficiency here. So I'll do this of BC that I will be expecting to hold the price. I'll be expecting the midpoint, the consequence encroachment of this BC here to serve as a support to the price. So that is what I'll be watching. That is how I'll be watching cable. So let's go to Euro USD, which is our fiber. On fiber last week, I was expecting 1.02500 to serve as a support to the price, and if you could see a movement into 1.05,000. Yeah, 1.05,000 short of some movements, or was taken. It was taken. 1.05,000 was taken. So the coming week, I'll be expecting the movement above this, above 1.02500 was the support level, and it's held the price, and 1.05,000 was taken. So the coming week, I'll be expecting the market price to take this high. This is the lowest hanging fruit. This high here, the high at 1.05331. That was the high. Then this high here, they are relative equal highs. So I'm watching 1.05. Let's see, 1.05500. 1.05500 to 1.06,000. 1.05500 to 1.06,000. As long as 1.03500 remains a support to the price, my support level will be 1.03500. 1.03500. So I've expected the market price to stay above 1.03500 and should be able to deliver 1.06,000. So I'll be expecting this CB here, sell side imbalance, buy side inefficiency. So the market price has seen a movement back into it. So this is a balanced price range. So it was a sell side imbalance, and we have seen a movement back in form of buying back into that level. So it's a balanced price range. So I'll be expecting the market price I won't expect it to drop into 1.03500. I'll be expecting the market price to utilize the upper half of this CB as a support. But I have to be realistic enough, and I shouldn't be rigid. So you were correct. Yeah, rigid, yes. So this is what I'll be watching. And I'll be watching up to the consequence encroachment of this week, because it's also a premium array. So the consequence encroachment of this week falls around 1.06 thousand. So I don't just pick levels, I go with the algorithm. So these are the highs I will be interested in. The market taking out this high, taking this high, visiting this little volume imbalance here, then the consequent encroachment of this. Can you see the confluence? So those are the levels I'm seeing the algo attacking. So without wasting much of our time, let's go into the S&P 500. On S&P 500 last week, I was interested in 6,000 being serving as a support to the price that will send us into 6100 and 6127.8. That was the previous high. 6127.8. This was the high here. 6127.8. So the high of this candle comes in at 6125.60. Call that a coincidence? Can you call that a coincidence? No. So next week I'm expecting a new high. To form. Okay, let me check the weekly. We are expecting a new high forming on S&P 500. So I'll be expecting 6127.80 to be taken, and if you could be able to see 61,200, you should be able to see 61,200. The market price should gravitate higher. We should see a higher price. So 61,200 will be on my radar on S&P 500. So we should be able to tag this level. We should be able to tag that level well. 61.27, and we should be able to see a movement towards 6200 on S&P 500. So to the Dow futures, Dow futures last week I was interested in 44,000 remaining as support, and the market price should visit 45,000 network. Or 45,000 was the target. So 44,000 remains the support. Then 45,000 will still remain my target for the coming week. So I'll be expecting the price to stay above the consequence of encroachment of this level here. The level drawn was drawn from this gap here. This is the actual gap, liquidity void. So I'll be expecting the liquidity void upper half to remain a support to the price that will send us into 45,000. That is what I was watching. So on Dow futures, I will be sticking to my previous week. I'll be sticking to my previous week analysis. So without wasting much time, let's go into our Nasdaq. Nasdaq last week, I was interested in the market price finding a support around 21,300, and we should see 21,600 and 22,000 being tagged. 21,600 to 22,000 being tagged. That is over 400 candles. And we saw the market price taking those level, and the level has been, the market price has went as far as 22 1 22 135. Yeah, the high of this candle was 22 135.40. So the coming week, what I'll be watching, I'll be watching the market price to continue moving higher. That is just it. The previous high was 22,142. So I'll be expecting the market price to form another high and take out 22,142. So 22,142 and higher. That is what I'll be watching and expecting the coming week. Let's go to gold. And gold, last week I was interested in gold going towards 2,900, moving towards 2,900, but 2,900 keeps falling short of some movement. So as long as 2,800 remain a support to the price, as long as 2,800 remain a support to the price, then I'll still be interested in 2,900 has been taken. What is the high of this candle? 2,900 has been taken. Sorry, I was expecting 2,950. Sorry, 2,950. 2,900 has been taken, but 2,950 has been short of some movement. So the coming week, I'll be expecting 2,950 to be tagged. Yes, I'll be expecting the 2,950 to be tagged because the market price is still below 2,950. So the coming week, I'll be expecting 2,950 to be tagged. Network. So 2,950 will be my still remain on my radar. So to the last but not the least, the BTC. The BTC last week, I was expecting 100,000 to remain its resistance, and we've not seen the market price triggered into 100,000. So as long as 100,000, the market remains below 100,000, I'll still be interested in 90,000. I'll be interested in a movement into 90,000 as long as the 100,000, the market price still stays below 100,000. So I'll be sticking to the previous week analysis. So at this junction, I'll be calling you today. Thank you for coming this far with us. Thank you for being part of the family. Thank you for subscribing to our channel. So we really love and appreciate you all. So a quick disclaimer before I leave. Everything in this video is for educational purpose and educational purpose alone. I am not a licensed financial advisor. So the fact that I put my money behind it does not mean you should do the same thing. Trading the forex market requires knowledge. But in today's environment, we've portrayed forex trading as a get rich quick scheme. Meanwhile, forex trading is not a get rich quick scheme, rather is a get poor quick scheme if you don't have the knowledge. But it is a must get rich scheme if you have the knowledge. If you have the knowledge, it is a must get rich, but it is not a get rich quick scheme. If you don't have the knowledge, it is a get poor quick rich scheme. Get poor quick scheme. Yeah, let me put it that way. So trading the forex markets, you have to know your risk appetite. You should have the necessary knowledge. So the fact that I put my money behind it does not mean you should do the same thing. This is not a financial advice. So it's just for educational purpose. I only analyze what I see in the market and what I feel the market is gonna do next. So thank you for coming this. I really love and appreciate you all. If you find this insightful, please like and share and subscribe for us to build together. Thank you, thank you, thank you. Be safe and trade responsibly. Bye for now.